Hello and welcome to BCR Webcasting. Today I'm delighted to be joined by Sandra Nolasco, who's the Chief Executive Officer of Twinco Capital. And Sandra will be speaking at our Supply Chain Finance Summit in Madrid on the 24th and 25th of January. So just ahead of that event, I'm very happy to be speaking to you, Sandra, and welcome to this webcast.
Uh, Thank you very much, Michael. It's a real pleasure to be here, and thanks to BCR for hosting these
Mm,
webcasts.
You're welcome. So I want to ask you a bit about Twinco Capital and what you're doing, and particularly what you're doing differently to most supply chain finance providers. And I had a look at your website; it looks very interesting. But in your own words, Sandra, tell me what is different about your solution? How does it differ from what everyone else is offering?
Michael, when people speak about supply chain finance, in fact, in the traditional supply chain finance solutions in the market are really just reverse factoring. That means that basically they finance the invoices once the goods are already there and the invoice is already accepted by these large corporations. All you're doing is literally discount the invoices. And we felt at Twinco that you really needed to do true supply chain finance. And that means started funding the supply chain from the beginning, from the moment the purchase order is issued, and that the suppliers actually need the funding to buy the raw materials and to start production. And that is the big difference in terms of what Twinco is offering. We offer the first supply chain finance solution that covers the full production cycle. With us, the suppliers can get the funds early, up to 60% of the value of the purchase order in advance when they get the purchase order and need to buy the raw materials. And then they get the remaining 40% once they deliver and the invoice is accepted. And then the buyer pays us on invoice due dates, um, just like in the normal reverse factoring solutions.
Okay, so that's interesting that you're providing a purchase order finance, pre-shipment finance. A lot of practitioners have steered away from that area as they see it a bit risky. How do you manage that risk? Is it that you just provide less of an advance at that stage, or are there other methods that you use to manage risk in pre-shipment finance?
Absolutely. The issue is all about how do you assess risk, and we leverage on the strength of the commercial relationships of those suppliers. So we actually we combine data and technology to assess risk. Banks normally only look at the financials of these suppliers, and these suppliers are generally SMEs in emerging markets, so it's very difficult to look at their financial stand and and provide them the funding that they require to start their production. We look at a much broad range of data. We look at how well they delivered in the past, how well do they do their t-shirts, their jeans, what's the strength of that commercial relationship between the suppliers and the buyers, what's their actual value added. A lot of SMEs, for example, have a very specific and unique proposition in terms of the design of what they are offering or in terms of their ability to actually fulfill already the requirements of these big corporates. So we look at a very wide range of data, and then we use machine learning algorithms to assess that risk and manage that risk.
Okay. So do you use all your own resources to do that, or do you cooperate with other parties in order to get that data in to make that assessment?
Well, the actual data analytics is very much our own capabilities and our own risk algorithm. From a data perspective, we get data from various different sources, from the supply chains themselves, from the buyers, from the suppliers, from an alternative data sources that cover a wide range of topics, including a very important one, which is ESG related performance.
Okay. And I also note on your website you say you can set up a client typically in 48 hours. So that's much quicker than others can do it generally. How do you do that? Is it very much technology that's enabling you to set up a client so quickly?
Yes, absolutely. It's again data analytics and machine learning. I mean, our advanced data analytics models allows us to assess and assign a rating, a risk rating to a supplier in less than 3 minutes. And the actual onboarding and know your customer, and we follow, by the way, a very strict AML regulation from that perspective. That is all done online through our technological platform, and therefore it's a lot quicker and more efficient than other people can do it in the market at this stage.
I want to also ask you about your competitiveness with banks in terms of financing costs. Typically, fintechs struggle to match the financing costs that banks can offer their services at. How do you compare with banks and their costs
Well,
charges?
yeah, we're very competitive. Firstly, because we have assessed and structured risk in a different way, and therefore we can be more competitive from a pricing perspective. And secondly, because our product is perfectly aligned with the requirements of the funding that the suppliers have. So the supplier, when they go to their local bank, they have to get a big loan, they have to estimate their production, and then even if they are delayed or if they have any problems with their production, they still have to pay their interest and they have to amortize their loan. With us, they only basically get their purchase order, and they are totally free to say, I need liquidity today, now, for this purchase order in particular. And once they have done that, all that they have to do is to export. And they will only pay a fee exactly for the days that they are using that fund. So if they get delayed, they pay a little bit extra for the days that they used. If they actually deliver before that, they are actually paying less than what they are initially. We give back part of the fee. So it's a very streamlined process. They only pay for what they use, and it's perfectly aligned with their export flow. So that's why it's so efficient. And it's also efficient from an agility perspective. So they get the money very fast in 24 hours and exactly when they need it in that perspective. So that's why we're so competitive from
Sure.
from a cost perspective.
Okay. And is there any potential for cooperation with banks? Let's say the client wants the bank to provide post-shipment finance, and the bank won't provide pre-shipment finance. Can that sort of cooperation, can that be done with you providing, say, the pre-shipment finance?
Yes, absolutely. We can collaborate with banks. We can, yeah, and from that respect, for the buyer, because the buyer is actually the one that puts the program in place. We engage first with the buyer, and the buyer can then offer these without any cost from their side. On the contrary, a reduction of the cost and without any additional risk from their side. They're the ones offering Twinco to their suppliers. And the bank can, and the buyer can decide whether they want to use Twinco for the purchase order and combine it with their existing reverse factoring programs, or whether they prefer to use Twinco from the beginning to the end and use it as an alternative supply chain finance product that not only covers the pre-shipment stage, but also doesn't consume any bank debt because we're not a financial institution. So that's totally up to the buyer, and it's a possibility that they can use.
Mm. Okay. And in terms of the supply chain and onboarding, you mentioned onboarding before. How far into the supply chain can you get? Again, this is another issue with that some providers come across. They don't see it as cost effective to onboard the smaller suppliers. What's your view on that?
Well, that's exactly one of our big advantages, is because everything is very automated and relatively fast. We are very, very efficient. So for us, we do not care whether the supplier is very, very small or is very, very big. We care about the consistent performance that the supplier had in the past and how relevant that supplier is for that buyer, not from a size perspective, but only in terms of whether these are suppliers that were existing suppliers and are recurrent suppliers of these big buyers. So you'll have suppliers that are very small and are providing buttons, but they are very important suppliers because the buyer has a long, well-established relationship with the supplier. And we can onboard them whether they are very small or very big, and the process is exactly the same. Just to give an idea, Michael, we actually started really after our known MVP, we started at the end of 2019 our first big program in that perspective. So all of our growth, and we've done more than 100 million worth of dollars of purchase orders so far. All of that has been fully online because we could not travel. So all of the onboarding process, know your customer, etc., and we're fully audited and everything else has been done fully online, and we're now present in more than 12 countries, covering most of the relevant sourcing markets for the textile and fashion industry, and we have more than 100 suppliers onboarded fully online.
Mhm. Okay. And in terms of geography, according to your website, you can provide finance to anyone in any country around the world. That's quite a big claim, but how do you manage that? I mean, so for example, if a buyer is in Europe, let's say, and the suppliers are in China, or vice versa, that's not a problem for you.
No, that's not a problem because again, we as actually right now we have buyers in Europe, we have buyers in Latin America, and we have suppliers in countries like Bangladesh, Pakistan, China, South Korea, Indonesia, Vietnam, because all of our product offering is established on the basis of technology and data analytics, and the data analytics is very much linked to the supply chain itself. So that's why we can be, we can make that claim, and the only limitation would be if for any regulatory issues specifically, you could not do the business in a particular country. But in general, from a technology point of view, and right now, we can make that claim, confidently.
Okay. And finally, you mentioned ESG before, and of course, this is a very big topic for everybody at the moment. How are you dealing and managing with ESG compliance and providing that aspect in your services?
Well, Michael, I'm very glad that you asked that question because that's a very exciting topic for Twinco right now. So when we started Twinco and focusing on actually improving the way you fund global trade, we looked at data and data analytics as the means to actually assess risk and be able to provide that funding in a more competitive way. What we've realized is that a lot of this information that we're using is relevant not only for us, but also for our customers, and also that the actual funding itself and the transactions was providing us additional data that is pretty unique in the market. So we have right now a very profound knowledge of our customers and our suppliers and the transactions that they're doing, both in terms of their commercial performance, of their financial performance, but very importantly, of their ESG performance. We know where their factories are, we know what kind of products they're using, where do they buy the raw materials from, so what is the origin of the type of the raw materials, whether they actually are shipping those materials or sending it by plane. So we have a lot of very, very relevant information that is very important for the ESG analysis and the analysis of the risk of a particular supply chain of a particular supplier or a group of suppliers. So by the end of last year, we've actually hired Arantxa Diaz-Lladó as a Chief Sustainability Officer of the company. She was ex-head of ESG in Telefónica. And we have just launched our first ESG module and dashboard that provides the buyer the ability to see all of the performance, what is the risk from an ESG perspective of those suppliers, but very specific on each of those suppliers specifically, and not only on a country or on a product. So we're rolling that out. We're testing that with one or two of our buyers, and we hopefully can kind of roll out that during 2023 to the rest of our customers and to the rest of the industry. It's very exciting because it's really a unique tool that can not only identify the risks from an ESG perspective, differentiate the suppliers in terms of what is the mitigating factors that they, as a supplier, are doing to improve their ESG footprint. But also, it's a unique tool for the buyers to incentivize their suppliers and manage their supply chain in terms of improving their ESG performance. So we're very excited with that.
Excellent. So, clearly, your business is built around your ability to analyze and trawl in data, and leveraging that to maximum benefit.
Absolutely.
Um, so, Sandra, we very much look forward to seeing you and hearing from you again, as I mentioned before, at our Supply Chain Finance Summit in Madrid on the 24th and 25th of Jan. But thank you very much for joining me today. Thank you.
I look very much forward to seeing you in Madrid and speaking at the conference. Thank you so much, Michael.
Thank you.